if you're looking for condos, we're like 7.7 months of inventory in Palm Beach County for condos and townhomes. I think if you find one, it can be a really good time to buy, because I think you're going to be able to get a deal on one.
When you need some advice, never sacrifice, always get it right. Ask the Planman. Finance, insurance, and more.
Hey everybody, welcome to Ask the Planman. I'm your host, Bruce Weinstein. I think we're going live. We should be going live on Facebook and LinkedIn out there. So welcome everybody. I'm being joined today by my friend Paul Lykins with True Floridian Realty. It says Palm Beach is Paul, but Paul's a local real estate agent down here in the Delray Beach, Palm Beach community. And we wanted to talk about the current affairs of real estate and opportunities for people up north, maybe, who are thinking about coming down here. So Paul, welcome to the show. Tell everybody a little bit about you, your business, how long you're doing real estate, and let's just jump right in.
All right, Bruce, thanks. And happy Monday, everybody. I started real estate I got in right about 2011, I think, right there. I guess I officially took the class. So I probably started 2012. I work with True Floridian Realty. We're a boutique brokerage in downtown Delray Beach. Been around for about 15 years. Nice place. I love working there. It's right in the heart of everything that we love down at Delray Beach. And I like working for smaller. I did a brief 3 years with KW, and then I came back to my old brokerage, and it just felt more right and felt good to be back at home. Grew up in Texas, moved here in 92.
Over 30 years in Florida. Okay.
Yeah, right when Hurricane Andrew was coming. That was fun. That was my first experience with a hurricane. And what else? I work a lot in Delray, Boynton Beach, Lake Worth areas. Primarily, that's where I focus. But I was showing properties in Boca yesterday, and I've got a potential listing coming up for Jupiter. So just, where the business takes you a lot of times, but primarily in that little area that we all live and work in, from Lake Worth to Delray.
So today's the end of September. About 2 weeks ago, the Fed finally, as anticipated, cut interest rates. The bond market had been moving well before the actual event. Everybody was expecting massive moves after it got announced, but the market is always leading. It's the leading indicator. But, how have you seen in the last month, 2 months, as we were anticipating the Fed cut rates a half a point. So we finally went from the last year and a half, 2 years of increasing rates. We stabilized for a while, and now we're starting to see a trend down. But what are you starting to see in the markets? Is it premature? I mean, I know most people's like, it's never a bad time. You always need a home to live in. But, if I'm an investor versus a home buyer, I want to give people some guidance and advice of, planning, where the show's the Plan Man. So, what kind of planning can people be thinking about? What's your opinions as an insider in the real estate world?
Gotcha. It's funny. I just had this conversation the other day with another realtor. And I mean, every realtor is going to have a different, activity level, I guess, in their business. But I spoke to more than a few, and they said it has been one of the slowest summers, and it's still slow. They dropped in, the lenders saw they knew the rate was coming. So they went ahead and lowered their rates. I know applications are up. But I have 4 or 5 listings out there right now that are just kind of, some are getting, they're getting looked at. Some are not getting looked at. So it is a little bit slower.
Are you finding it? If I may jump in, are you finding it? Is it based on a certain price point where,
because I have things priced from as low as $299,000 up to $989,000. And so it's just definitely been slow. And as far as buyers, I'm working with a cash buyer right now, but I haven't worked with anyone that's, doing taking out a loan for quite a while now. I think it's the last one I did was a month ago that I closed. So for me, it's really slow. Now, I get a lot of my business from out of state. The Palm Beach is Paul is my YouTube channel. I do a YouTube channel. I've done it for about 7 years. That YouTube channel gets out there to people all over, but a lot of them are in the Northeast, places like that. They watch my videos. They reach out to me. I had someone from California reach out to me. They're looking at doing a 1031 exchange. They're waiting to do some things out on the California condo before they want to come down here and look in Pompano. So a lot of the business I get is from those snowbirds or people looking for either second home, winter home down here, or sometimes they're moving here. And I've seen a big slowdown in that. I used to get quite a few calls and emails. Every time I pop a video up, I would get the phone ringing, and a lot of that has slowed way down. So I think in general right now, even though the rates have come down, I still think a lot of people are just waiting till this election is over with. And I've talked to multiple people and they've said the same thing. Every time there's an election year, people just kind of freeze. They don't know what's going to happen to the market. They're not sure. I agree with you. I think the rates are good right now. Jump in and take advantage and look, because I think there's some buying power for buyers right now. There's more inventory on the market. I think, you can negotiate a little better because there's not as many people out there, you're competing against, and take advantage of that and get it out. Because I think once the masses get out there and start showing up again and looking, well, then the prices are just going to start going back up, because, that home seller that has 2 people come through is more willing to negotiate than when he has 20 to 30 people at his open house and he knows that everybody wants it.
Well, look, we had this vacuum of COVID with everybody coming down from the Northeast and other massively other states. But now, tied into my world, I think it was 60 Minutes last night, if I'm not mistaken, after the football games, came on and had an expose about the problems with the insurance companies down here and the challenges and the whistleblower regarding claims being fraudulently adjusted downward. And so from my vantage point, where you and I tie in, is we've got issues with not getting affordable homeowners insurance, not being able to get a normal aged roof covered, and that the prices of rebuilding a home have escalated where people don't want to pay $700-800 a square foot in insurance coverages, but yet that's what the insurance companies are pushing towards, so that your $1 million house, 4,000 square feet, it needs to be insured for way more than you would normally think, because lumber costs, labor challenges, supply chain issues and everything that's going on is where you used to build a house for a couple $100 a square foot. My team's quoting $700, $800, $900 and people are aghast of like, I'm not paying 20 grand, but good luck getting insurance. And so, this is part of the problem that I see escalating. The prices of the houses are one thing, the costs of money are another, but now between property tax, HOA, and the biggest challenges in the homeowners insurance world, you're getting a perfect storm.
Yeah, and having Hurricane Helene that we just had doesn't help any, right? I mean, that's just disastrous.
Well, not good. We were lucky, but you're in general, you're seeing,
right.
Yeah, you're seeing billions of dollars in other parts of Florida and now other states being impacted. Yeah. And then when people say, well, I don't know why my rates are going up, I didn't put in a claim. I'm like, it's our pool of money. It's just managed by insurance companies. It's Paul's money. It's my money. It's your money, listener out there. And so when the pot is emptied, because we got to pay claims for Tallahassee and northern and western Florida, even though it didn't hit us in Palm Beach County in the southeast side of Florida, well, next time it could. So if the money's not back in the pot, this is the age-old problem that we're facing. On top of which, the last 2 years we've had 7, 8, 9 carriers leave the market.
Yeah, no, it's very difficult working with, you're out there working with someone, a buyer, and we're looking at the properties. The first thing I'm looking at is the roof, right? Like, let's even see if this is worth going after.
Exactly.
If the roof is so old that they're not going to get a policy on it and they're financing it, and there's maybe some ways to. It's just really difficult. I mean, I know sometimes you can try to work. There's some deals that have been done. Maybe they kind of hold some money in escrow, but the insurance companies want that roof to be good before they want to bind it. So it's not like it used to be, with polybutylene. It used to be that if I found a property and it had polybutylene, we could get the deal to close. They could bind their insurance. We could close, but they wouldn't cover, say, a leak, right? They would make them within 30 days. You'd have to get the plumbing fixed, or the old electrical panels. They'd be like, okay, it's closed, but if you don't show proof that you did that, we're dropping you as the policy. And then, of course, you're in a problem there, especially when you're, financing. But at least, unless I'm unless it's been done different elsewhere, I'm told you can't even do that anymore. They won't even, there is no grace period anymore.
No,
they want all that stuff done before you close.
Look, it again ties into the selective end of the process. So, insurance has a buzzword, if you will, called adverse risk. So a smoker is an adverse risk when it comes to health insurance and life insurance. Why? Because the actuarial tables say that a smoker's life expectancy is greatly diminished compared to a non-smoker. That's an adverse risk. Somebody with diabetes, adverse risk. So when you have homes that have existing problems, there's adverse risk. And so they don't want to take on a problem. Why should they bother spending time and energy underwriting somebody in the hopes that they get it done in 30 days, and then they got to turn around and drop them? And they've wasted their time and energy paying commissions and paying people to work on the caseload. They're like, right. You know what? Not our problem anymore. We don't have to take you. We've got a full book of business. And this is part of the problem. This is why rates have gone up. So if you think about, again, in our area, Delray, Boca, Deerfield, Lake Worth, Boynton Beach, just think of every community that has 100, 200, 500 homes. Well, in the past, you might have 10 insurance companies covering that neighborhood of 200 homes. Everybody takes 10 or 20 homes. Well, now 3 of those insurance companies have vanished. I don't want to insure the whole community, because if the storm goes right over that community versus 3 blocks over, I'm responsible for that whole community, and you didn't get anything because you had the community over in Boynton. And so that's spreading the risk. So now if you have the pipe problems, you have the roof issues, you're not meeting our checklist, no thanks.
Yeah.
And so you as the consumer are screwed. And, we see it, folks, if you're not from the area, there's communities down here that are more senior oriented. There's communities that are more younger families, so people move into Boca for the school systems. They're more expensive neighborhoods these days. You move a little bit north to Delray and Boynton and Lake Worth, well, they tend to be more of the senior audience. You're not going there for the schools. Taxes are a little bit more favorable. But guess what now? My parents' generation, somebody in their 80s and 90s, own those homes for the last 30 years. And now you and I inherit that home. What are we going to do with it? Right? So either we move into it, we fix it, or in most cases, they contact Paul. Hey, I need to sell this house. My parents are gone. Oh, Paul's got a 30-year-old train wreck house to get rid of. Right? And the family that inherits it, or it's one couple, a couple that one passed away and the other is elderly and she can't stay there anymore, or they're getting ready to leave and move to assisted, living of some kind. They don't want to put the capital in. They don't have the time and the energy to go get labor and spend 6 months fixing roofs and making repairs. They just want to add it into the price and discount it to the buyer. But now if I'm the buyer, I can't get insurance. So we're stymied, and this is escalating. This is becoming a big, big problem down here.
Well, it's funny you said that, because we actually have a unique little program that if that is your problem and you do have that condo or that property, reach out to me, because we do have a program that we've been working with people where we do have the renovation, we call it a reno to sell. And we do work with contractors. We have an in-house team, and it's no out of front pocket like expense for the seller. Like we go into work with them on a contract. They decide what they want to do to upgrade the house. The work gets done, and then basically the money gets deducted after the sale of the property, pays the contractor. But it's a good program because it doesn't come out of their pocket right away, and it allows them to take a property that might get very low offers, because it needs a ton of work, and they're just going to get those investors that are going to offer nothing, to now it's a marketable product that you can put on the market and is more move-in ready. So that is one option if that is something that people are facing.
So let's go back to just to make sure I'm capturing this. So if I'm a seller and I'm in kind of a distressed financial situation where I can't lay out the 50, 80, 100 grand I might need, you've got a program that will work, provide the capital, the labor, if you will, the transition, and then maybe take a percentage or a fee or something along the way. But you're helping them out. You're becoming almost a subcontractor of a process here.
Yeah, it's and I can go into more detail about it. If someone's interested, they can reach out to me. But yeah, in a nutshell, we've partnered we have a group of people that we partnered with, and they'll come in and meet, and they'll look at it, and they come to an agreement, sign a contract, and it says, we're going to do this. Maybe it's a new roof. Maybe it's a new kitchen. We do all these things, and you get it ready. Now it's nice and show ready, and it allows you to market the property for more than you could have in its original 30-year-old condition, right? So now you got a nice product.
Yeah.
Maybe the roof's good, right? New roof. People are going to like that. Upgraded. So it's someone coming down for that person coming down here for a winter property, and they don't want to do any work. They want to move in ready. Now they have a move in ready property, and it's easier to deal with than one where they got to come in and do a bunch of renovations. And
what about representing the buyer side? Is that something feasible that can be done as well? If I'm the buyer and I've got this home and I feel like this needs a bunch of work and the people aren't prepared to do it, can I bring you into that conversation? But you'd still have to represent the seller, or how might that work?
Well, I don't know about on the buyer's side. I mean, this is more just, something that the seller would agree to say, hey, Paul, this is like, for instance, we have a condo we put on the market, and that condo had someone living in it. She was a renter was in it for like 23 years. Right. And then the seller, the renter finally moved out or whatever. And the seller's like, hey, nothing had been done to it. And she goes, hey, I want to sell this. And of course, the initial offers were really low. And then we talked about the program. We put in a new kitchen, fresh paint, new floors, really made it nice and clean. And now it's more comparable with some of the other properties that are for sale in that building. And so now it's nice. And so what happens is, I guess, you get to the end of it when the property goes under contract. Obviously, the money the fees that cost to upgrade it would get subtracted, right? The seller, that gets paid to the contractor. They're good. And then the seller takes their difference.
Awesome. Well,
so
I would think
it's a way of selling a property that otherwise would have just been really ugly and needing a lot of work and getting a very low offer. Right.
Well, the question is the carrying costs or the opportunity costs of not doing the work, right? At the end of the day, you put in $100,000 and you get the same $100,000 out. You say, why bother? But you may never sell the house. You're still paying taxes and HOA and insurance on a property that's corroding, literally, right? It's eroding away. So it's just a way to help mend that fence and get out of there. So I would think even for the buyer out there that's listening, if you've got a property that looks something like that, you can bring it to the seller's attention. You could bring Paul in and let the seller figure it out. And, maybe you could wait for that property to be done or not, but it certainly helps both ends of the transaction.
Yeah, it's not a one glove fits all, but it's been a good program for a lot of the properties that we've worked at. And so far it's been very successful and people like it. So yeah, just, again, you're just trying to find a solution to hopefully get a little more money in their pocket, and, get it all done. And as opposed to when something's in just really bad shape, I've seen properties that are like just really haven't had anything done to them. And the only offers you really get are these investors that are looking to just like steal it from you. And so, which you can't blame them. That's their job. That's how they make their money.
Absolutely. Absolutely. So, there's a buyer out there for everything in reality. Let's pivot a little. Go ahead. I'm sorry.
No, go ahead.
I was going to just tie in as far as the world has become during COVID, especially low interest rates the last few years, the flow of money that was out there. There seemed to be a boom in the Airbnb type of business. So how are you seeing that? I've always found, years back when I started investing in real estate, my son was at Arizona State, and I had my son Matthew was down here at North Broward Prep. So every month, every other week, I'm flying between Arizona and South Florida and New Jersey. And I started buying properties in Arizona, one for my son to live in while he was at school. And again, this is 2009, 2010, when the market was really, hitting the dumps, right? Everything was short sales and, all these challenges. But what I kept looking at then, and prices are nowhere near where they are now, post COVID, but I kept talking to my realtor at the time, and I'm like, the carrying costs in Florida to buy something and rent it were so much more challenging with HOAs, and there are no HOAs in the Tempe Scottsdale marketplace. That stuff didn't exist. Insurance was super cheap, taxes were super cheap, and so I started to buy small little ranch houses out there and renting them out, and was able to make positive cash flow. My son got to live there for a few years, basically for free. The rent covered, his cost, the cost of the place. So instead of me paying $1,000 a month for him to live somewhere, he was living for free. And then eventually, you're paying down the properties. But, fast forward 15 years later, where, we're seeing 7-figure homes in a lot of Palm Beach County, and the condo market, 200,000-300,000. Like, is it viable down here right now? Like, what would you say to somebody in an Airbnb type of investor? Is there money to be made in this market right now?
I don't have a lot of experience working with people that have done Airbnbs. I know I worked at an open house this weekend with one of my coworkers where they're selling their Airbnb. It's not her. She represents it, but gotcha. They want out of the business. I haven't worked with a lot of people that have done. I've had a few investors look, but not so much in the Airbnb. I did one many years ago. So you're using the word investor then. So I apologize. I misinterpreted what that means. But Airbnb, yeah. But I think
what's your definition of investor? If somebody's looking to do business with you, or you're looking for investors, it's just somebody who's looking for a second home, or somebody
they want to flip it or buy it. They're going to rent it out. But okay. I've worked with a couple, not many. I know, like you were just saying a minute ago, that I think with all the fees, the HOA fees going up and the insurance fees going up, causing the HOA fees to go up, and they're having to do that. That's all that carrying costs that they have. And rent prices are kind of coming down. There's an abundance of rents, so rent prices are dropping a little bit. I don't know if it's the best time for them to look at it. I mean, I think it's extremely expensive. And with the rent prices, I saw an article today that showed that a lot of people that were investors or Airbnbs are selling those properties. So trying to get out of them. Right? Across the state of Florida, it seems to be quite a bunch of them.
The beauty is you don't have to just pick Florida. I guess if you're an investor in real estate, you just go research other markets and what's hot, like a Nashville or Las Vegas or, something else that people might have a desire to go to. But, as they say, Paul, we live where you vacation. Yeah. So hotel prices are crazy. The resorts here have gotten very expensive. They're at, capacity all the time. So the demand is there. So you would think people, we have friends that come down and they do look for Airbnbs, and it usually is somebody's house. Maybe there's a bungalow. A lot of houses down here in some of the communities have little pool houses that people have made into bungalows, and they can rent them out. All over, I'm just wondering if there's opportunities for, anybody in this point.
Yeah, it's and maybe it's just I haven't focused on it, but in the time that I've done, most of it's not really. I haven't done much with any body that's looked at those. Like I said, I helped someone many years ago. A lady had bought one in Boca. She bought one for rental. We're going back quite a few years, but it's just not a lot of the portfolio that I've worked with. So
understood. So looking at the clock, what are a couple of tips or takeaways we can leave the listener out there? What kind of tips do you normally, or guidance would you give the people you take under your umbrella and work with?
If you look, there's a lot of, if you're looking for condos, we're like 7.7 months of inventory in Palm Beach County for condos and townhomes. I think if you find one, it can be a really good time to buy, because I think you're going to be able to get a deal on one. But, you want to do your due diligence. Like, for instance, the one I told you about, the one condo we had, they did their milestone inspection. They have no assessments. Their reserves are strong. Everything that you want. It's a well-managed building. And we've done a lot of business in that building over the years, my broker and I. So, you want to look for that. Obviously, there's, the clock's ticking. December 31st is coming up, and a lot of these buildings have to have these milestone inspections done, or at least have a contract signed that they're going to get that done to meet that deadline. And so, you want to definitely do your due diligence when you're looking at the condos. They're not all bad. A lot of condos have done their work. They did the work they're supposed to. They did their restoration. They did their assessments. But then there's some buildings that you're walking into. We had a buyer, and we did one not too long ago, and they had like a $30,000 assessment on that building. Ouch. So, it's so it just depends what you're looking at. And for homes right now, I'd say get out and look. I think it's a good time to get out if you want to get out before the rush, because I think, especially after the election, I think people are going to jump back in. They already said the applications are up quite a bit. And with the rates going down, I think a lot of people are going to be out there. And when you get that many people, once everyone starts looking again, I think prices are going to kind of tick back up. And I think right now there's that, time where you can get out there. There might not be as much competition. You might have a better chance of negotiating a deal for yourself.
Well, like I said, the election is definitely having people step back a little bit.
It always does.
You've still got forecasts for lower interest rates. That gives people an excuse. There's a lot of money out there. People have seen in other markets massive price increases. I look at my community back in New Jersey where I left and talk to my friends and neighbors who are still there and, see the 50%, 80% price increases there since I left. So, they decide they want to make a move. There's a lot of capital up there as has happened, which is what caused such a bubble down here, if you will, during COVID was people were just outbidding each other $200,000, $300,000, $400,000 on a property because they wanted to get the hell out of where they were. And they were just crazy. They didn't care.
It was crazy.
So it was a phenomenon that I don't think we're going to see the likes again until another pandemic, I guess, becomes, God forbid. But yeah, I mean,
and look, sellers, and to add to that, sellers, it's not that market anymore. We're not in 2022. You can't price your house here and think that that's happening. I mean, look, there's always the rare acceptance, right? The perfect house has everything and somebody wants it. But the majority, it's like, no, you really need to pay attention to the market and what the market's telling you and price that house accordingly because buyers have options right now. And even though, those that are out there buying, especially if they're cash, they're not going to pay those 2022 prices.
Right. And when the buyer's market comes in, then, you're at it's at their pleasure of what they're willing to pay or not pay. And that's becomes the musical chairs. If there's, as you said, 7 months of inventory and there's not a lot of buyers out there, it's just a matter of who's going to flinch first and keep lowering their price. But as an investment planning type of show, I always like to reiterate to my listener out there that all markets, stock markets, the gold market, commodities, real estate, there's historical trends and there's historical rate of returns and price movements, inflation included. And so anytime you have a boom, that's where they label the word bubbles, where things are getting overheated. It's outside the normal standard deviation. If the stock market has an average rate of return over 150 years of 10%, and it has a 50% move in a given year, it's going to adjust at some point to come back down towards that average of 10. And we had that with the dot-com bust in 2001, where we had the S&P 500 barely made 1% average return for that next 9 years, 10 years. And so I tie it into real estate is don't think it can't happen with real estate. When you see a 50, 100, 200% move in prices, at some point, something has to start to back down. So if you had $1 million home, it goes up to 2 million. And now you're trying to sell it and you're belly aching that you got to take 1.8. You should be happy you're still getting 1.8 because it probably should be closer to 1.5 and 1.4 and 1.3 as things start to come back down to average out because there was no reason for the million to go to 2 million. There was an abnormal movement in the market and God bless anybody on either end of those transactions. But historically, what I'm saying, and it might take 10 years to level out. It might take 20 years to level out. But you also then roll out the real estate collapse of 08, 09, and 10, 11, and the blight that was going on. Well, now you throw those years in, and all of a sudden, what is my average again? So we do have to remember history does repeat itself and understand historical trends, which is why, again, I'm going to throw it in. I'm concerned about the stock market being at all-time highs as we're heading into an election, potential regime change either way, because it's not going to be the same president. It might be the similar administration, but if she wins, it's still Democratic fiscal policy. And if Trump comes back, we go back to Republican fiscal policy. So what does that mean to everybody? And what does that do to the stock market? And so you're hearing a lot of grumblings out. And my podcast will be released about next week, or I think this week, actually, where we're talking about the proposed tax changes and the complications and the knee-jerk reaction that's going to happen if we get massive tax code changes and increases. And that's going to have an impact on real estate. as much as the stock market, because the liquidity for a lot of real estate comes from the profitability of the stock market and the bond market and everything else. So that's my tie-in, as we bring this to a close. Paul, if somebody wants to work with you or at least have questions, I certainly was intrigued by that program you were talking about with your sellers. So I'm sure it might get some interest there. Yeah, what's the best way to get a hold of you?
And I'm not, although I know I probably didn't explain it the best as my broker can, but we have all the information for you. We have a brochure and all that and get it to you. But if you want to reach out to me, you could just reach me. Do you want to just throw my number out there?
Yeah, I have it here. You want me to read it?
Yeah, it's okay. So it's 561-267-4284. You can see me on YouTube at Palm Beaches Paul. That's my YouTube channel, where I go around and talk about things that are happening here in the South Florida marketplace, the good and the bad, why I love living in Palm Beach County. I tour neighborhoods. I talk about home prices in certain neighborhoods, what restaurants are close to it. Kind of give those, especially for your people that aren't, that don't live down here that might be listening and watching. It gives you an idea of South Florida. And, I've been here, as I said, 30 something years. So I love that. So check out my YouTube channel, Palm Beaches Paul, and give me a phone call. I'm with True Floridian Realty. We're in downtown Delray Beach, and be happy to talk to you and answer any questions.
Well, thank you so much for joining us today, folks. This is a trial and error process going live on Facebook and LinkedIn. So I hope you tuned in. I hope you watched the show. Hope you got some information and guidance on it. So, Paul, thanks for being a good sport and giving us a go with me today.
Yeah, I've done too many lives, so probably more nervous than I normally would be in one where I know we can edit. Like, oops.
We got to go real. We got to keep it real. So I actually pulled my phone out to make sure it was working. So I'm kind of looking to the left a little bit. So I see us live. So I see it going there. And I think people can ask and answer questions. We'll have to figure out how to do that more frequently. But I'm going to have to do this more often because
I appreciate
my recordings are 2-3 months out normally when I release. So a live here and there might make some sense. So, folks, please like, share, subscribe. Go to planman.tv. Go to asktheplanman.com. I'm your host, Bruce Weinstein. If you need some advice, always get it right. Come ask the Plan Man. Please like, share, subscribe. Hit me up at 844-PLAN-MAN. Again, Paul, thanks for being with us today, folks. Until next time. We'll see you soon.